Oh, well, it's Tuesday. The sun's shining here in sunny London. It's 10 to 3 here, so the big data for the day. First big data dump of a very important week about to come, the consumer confidence number. Remember, US consumer confidence is, let me just put me up here a bit. Let me look at my ugly mug for a bit. US consumer confidence, remember, is critical to the sentiment and the feel good factor that's been running through the US economy as it's recovered from obviously the major drawdown of the pandemic, and it's held up really well. What we're looking for today, if I just bring up our calendar, what we're looking for today, if you can see this number here, hopefully you can see that 111.8. That's going to be the highest it's been since I was checking this just before I came live. February 2022 was 110. January 2022, it came in at 113.5. The full blow of 2022 was still to come, and the bounce back effects of the post-pandemic surge was on. So this is obviously fueled currently by the sort of feel-good factor with Trump coming back as far as the economy is concerned. Interestingly, yesterday, as I said in the week ahead yesterday, let me just bring the charts back up. We'll have a look at the dollar. If we bring the charts back up here and make that a bit bigger so you can all see a bit better. There we are. I'll just check if anybody's asking it. So the dollar, this is today's opening. This was a big jump on the announcement that the Treasury Secretary, Mr. Bessent, is a bit of a fiscal hawk. So we had a weaker dollar, weaker yields. Bonds were up yesterday. However, we've sort of shrugged that off today. So we jumped through the key 107 level here for the dollar index, but since then we've sort of weakened during the day, but we've turned around as we've hit this recent support here at 106.50. So quite a volatile day for the dollar index. I don't normally trade the dollar index. I show you the dollar index, but it's key for how the market is. Excuse me. I've just had a chocolate biscuit, and I shouldn't have done just before I come live, should I? But my coffee's over there, so there we go. So yeah, it's quite a significant volatile day today, as you can see, compared to yesterday and the day before. Obviously, we'd had a rally up to 108 earlier last week. So I thought, yeah, dollars sort of come back a bit. So let's have a look what this the key data is to come. The other key thing that's happening as well is we've got markets are closed Thursday for Thanksgiving. US is only open for half a day on Friday. Very low volumes. We could have some spikes in volatility as well with these low volumes. No lead from the US on Thursday into Friday, so it'll be quiet in Asia, and Europe will be relatively quiet as well. Obviously, it's this idea of Black Friday. Everybody goes mad shopping online, and then Monday becomes Internet Monday, where everybody shops online again. It's all sort of rush-shade around the world, but really, as I say, consumer confidence absolutely key. It's very high, so if there's a miss, it won't be too much big of a deal, I would argue. New home sales also in 5 minutes or so. Remember, the pending home sales, existing home sales are also quite strong last week. This is a very hot number as well. New home sales. Remember, those are the ones that are literally new builds. So that it's the biggest commitment people make, families make, individuals make to their financial sort of next 30 years. Remember, mortgages in the US are typically 30 years, typically fixed rates. So anything over 550,000 is a relatively strong US economy. And here we are at 725,000 expected this afternoon, 738,000 last month. So it is showing strength. Obviously, it's rallied as the expectations of the interest rates coming down helped. That's cooled a wee bit. Obviously, there's some question marks over what the Fed will do in December. It's 50-50 really, whether they'll cut again or hang on. Obviously, Trump gets inaugurated in January. He's talked about some significant announcements, particularly to with tariffs overnight. Talking about his nearest neighbor, Canada, 25% tariffs. Obviously, Europe's in the firing line. Obviously, the Asian markets, particularly China. So see actually what happens, what actually comes to fruition. But it's looking like the promises made in the election will probably come to fruition. Whether there is as dramatic as the worst case scenario doomsters were talking about is questionable. I mean, look at the way he went ahead with putting up Gates as Attorney General, knowing the baggage that was in his locker, knowing he had other people in the background he could replace him with if that headline didn't get through, and also plays into Trump's political situation that Washington is stacked against me and blah 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 blah. Gates said as much when he went down. Anyway, that's the politics, but it does impact on policy as well, as we've seen the rally in markets. So dollar 106.85 ahead of the data. Let's just leave the calendar on. It's due in. Actually, just quickly try and run through some other charts. So dollars been weak all morning, looking to pick up on the day. Run out of steam. This is the hourly chart. In Europe, DAX this morning are currently 19,400. Again, a bit of range bound one here on the hour. It's had a good rally Friday and yesterday into this 19,475 area, an area we mentioned before. And if you were watching on Friday and yesterday, we were talking about, we went long on Friday night on the two of the US markets. That's the hourly chart. We just got the daily chart. It was on the end of day basis. We went long on Friday. Well, there was a small trade on Thursday, close of business. Long Friday night, and we had a follow through yesterday. All-time high into close yesterday for the Dow. We're still holding that. Stop losses moved up to the bottom of yesterday's candle there at 43,915. The other market was the world's most important stock market. It's the S&P 500. 2 minutes to the data, so I'll come out of this obviously before. Again, long Friday here on this moving average. You can see how the moving averages, this strategy here went long. Have been short here on the 30th, reversed, and that was a losing trade, but we've been, more than made back for it. Now, new all-time high here towards the middle of 11th of November, into the 20-day moving average, and that really, that tickled me. We've held it really nicely here. So, 1, 2, 3, 4, 5 days, and we've ran away from it Friday, up again yesterday. New intraday all-time high for the S&P 500 as well, and we're up again today. So the Dow was down today, the S&P up, and just for, we haven't got a position on NASDAQ, but the NASDAQ also, or the NASDAQ 100, 21,253 here at the middle of November high. So we're having another go at that. You see, we triggered, and again, very, very similar pattern here, nicely held in holding the 21 exponential moving average, and down yesterday, but up again today pre-market. Obviously, markets markets have just opened half an hour ago. So let's just quick flick back to the data. This hasn't updated for some reason. Come along, Mr. Investing.com interactive charts. There we go. Defaults to takes all my saving partners out. Right, so consumer confidence, record high. Well, I'm going to say record. It's in red here because it's coming in at 111.7. As I said, the last time we were over that was February 2022 when we came in at 110, 113.5 the month before January. So it's a high we haven't seen since the beginning of 2022. Consumer remains resilient. Interesting big markdown here for the previous month. That's a really technical error, and it's probably to do with the impact of hurricanes potentially. But housing here, Charlotte, positive as well. New homes, quite a miss actually, 610,000, worse than expected. It's quite a significant miss, but again, obviously the weather could have impacted that number as well. But that's quite a significant move down, perhaps on the back of the Trump victory and expectations that the Fed might now stall its rate cutting curve. Remember, we were talking about 5, 6, 7 potential rate cuts in 2023 because 2025 because they hadn't been as aggressive as they'd expected during 2024 is what the market was perceiving, with Trump in the White House. So that's quite a significant miss, to be honest, $610. But as I said before, anything over 550 is still a positive for US housing. So overall, that's although the red numbers here, and the Richmond manufacturing is coming at -14, which is what it was last month. It was expected to be not as bad, but it's got it only as a minor impact here. But overall, the headline, all that data looks negative, doesn't it? It's red, and it's a minus for the manufacturing out of the Richmond district. However, let's have a look how the markets have actually reacted to that. So if we just we'll stay with the Nasdaq because we're on indexes. 5-minute chart. There's the 5-minute as the data's come out. Relatively negative, relative volatility. This is only the 5-minute candle. Remember, let's have a look at the more important how the forex markets are reacting. So stocks down initially. Again, say the headline looked negative. Dollar might have picked up on that. I didn't mean the crosses. I meant the majors. So let's start with the euro. So euro on the 5-minute. So again, that's ticked up. So dollar's weaker. Stocks have weakened a bit on that relative, as I say, miss of the actual data. However, I would argue that's still a very strong US data file. Consumer confidence still holding up remarkably holding up. So, dollar's had a good day or the euro's had a weak day, I should say. We were back under this very, very strategic 105 level here. This is still only the 5-minute time frame. If we just go up to the hourly, you can see what a weak, there we are, weak turnaround we've had. So 105, absolutely fundamental area for euro traders. Many are obviously talking about parity and below parity. If you look at the weekly chart, it actually, the major support on the weekly chart, I didn't mention this yesterday, but it's below parity. Here's the weekly chart for euro, and I've got 106, 5 and 4 here, but as you can see, parity's down here. Parity, 1 for 1 euros worth or exchanges for $1 US. But as you can see, parity didn't actually play a part. So it's a big old fall. There's a big old candle here on this week of this time November the 7th, week of November the 7th, 2022, 2 years ago. So that took us all the way on to 89.85. So parity hasn't played the support that many would have expected on these weekly charts. So that's why that was talked about as Trump came into the White House, and that's the 3 weeks since the election has been composed. It's been a strong dollar and a weaker euro with this divergence in policy, with the ECB, the central bank in Europe, still looking to cut. The Fed very much now on hold. Sterling had recovered the key 125. Sorry, that's the weekly chart still, but there's you see the 125. We've sort of bounced off that. It's coming. Let's make that today. You still see that chart. There's the zone. So we went into the weaker dollar on the that Besant announcement, but then that's given it back, and it's sort of we're back to 126, or we were around lunchtime. Again, you see the resistance that this area is proving. These round numbers do come into play all the time, guys. Don't underestimate the impact of these key 00s and the 5s as well, 50s. People say, oh, you overplay. Time history shows us that they're very, very significant. So anyway, 126, we got to the high today was 126.15. Couldn't hold it for that hour. We certainly couldn't hold it the following hour, and we've been down ever since, and we're currently trading at 125.65. So that's looking to go short here on this hourly time frame. But you see, we've been chopping around all day, long and then short, and I mean, winning trades are in there on that 1 hour time frame. So it's a little bit sticky. Higher time frame, the 4-hour time frame for cable is looking a bit more positive. You see, we've got a rally here, which was killed out. We've got another rally here, which is always quite interesting. We get these. So we've got support here. I'm terrible at drawing trend lines. I don't know why. Is anybody better? Everybody must be a better trend line drawer than I have. No matter what platform I'm using, I've always been rubbish with trend lines. But you can see this is quite an interesting potential pattern. We've got these consecutive equally angled trend lines. So if we get another one of these in this range, it's 125, 126, we could break out quite significantly. That would suggest to the upside. However, whether that actually comes to fruition before year end, we shall see. But that's interesting to watch on that's the 4-hour time frame there. So yeah, sterling relatively big technically. So but we'd like to see a break and hold of 126. Certainly on this 4-hour time frame, if we're going to take this higher. If not, we're trading the ranges. We're trading this mean reverting angle. So we've been down 100 pips, up 100 pips, down 100 pips, up another 100 pips. Potentially, let's see what happens. Obviously, we burst through there a wee bit a couple of times, but that's an interesting setup. Are there going to be more short setup at 126 for cable as we attach this to the third time on this 4-hour time? A lot of professional traders I know trade the 4-hour time frame. It means they don't have to, constantly watching their charts. So have a look at that, my friends, as we go forward. Yen, dollar yen. 4-hour time frame again. The moving averages are keeping you on the short side of this. From the big breakdown candle we had here on the 21st, sideways, but then down again. A little bounce, but down again, down again. See how the red candles are bigger embodied than the green candles. And this morning we had a big shakeout as we broke under this 154 area, which, as you can see, had proved a bit of resistance. Had been proving support, and it looks like it's given way, given that our closing candle here this morning couldn't actually close above 154. So that's a negative negativity in its sense. It was engulfed by the previous negative candle. The body wasn't bigger. The wick to that north was higher. That's all rejection. And then this following candles pushed it low. So we're trying to find a new floor. We've gone through 153, 50. 153 itself is not way down here, but down here, and we can see here within the candle time frame itself, we've been to test under 153. So that's a key test as well. So next level will take us perhaps to the 153 for dollar yen in the next couple of days. But as I say, remember, not the 5th of November, but remember, it's Thanksgiving Thursday. Lots of positions being wrapped up. Some of these profit from this entry here maybe getting taken over the next day or two. So be careful with that one on that 4-hour time frame. But again, bias to the downside, 153 now in play for dollar yen. Let's just go through the rest of the majors. The Aussie, as we've been saying for a while, is pivoting and continues to pivot through .65. We haven't seen any change on that really. We tried to break higher, tried to get the 65.50. We couldn't. We topped out at 65.40 and went down again today and yesterday and today. And again, interestingly, we spiked lower again from the support area we had last week through 64.50. Our 4-hour inter spike has taken us to 64.33 to the downside for the Aussie. I think I mentioned that on a higher daily time frame, didn't I? So again, Aussie at its current support area, which it's held for 3 or 4 days here. Are we going to see that holding again at the moment? So maybe some buys at this level at 64, 65, 64.50, that range. But we've had a spike low, so 64.50 certainly come into play for the Aussie. The Canadian dollar come back somewhat. And then the dollar's had a really good rally here into close yesterday, back through 140 yesterday. Early in the week, we'd got under 140, 139.20, and big turnaround to the upside, 141.50 again. If I just take this up to the daily time frame, you can see what strong rally we had yesterday on the expectation that the pressure is perhaps easing in the Middle East. There's some chatter of proposals about ceasefires in Lebanon holding sway, and obviously the reaction. Let me just while we're looking at CAD, so we see the dollar is very much back on the front foot. Canadian dollar on the back foot. We got as high as 140. 41.77 yesterday, and although we're down today, as you might expect after such a big jump yesterday, we're still holding the key 140. For some reason I'm taken off there, but let me stick this on there whilst I've got you. 140 is just about there, isn't it? Not just settings. Let's change that. I didn't mean to do that. I deleted it rather than click the settings. Yeah, silly old fool. There's 140 and settings are there, and we'll just get rid of those two. There we are, 140. Let's mix it nice and round, nice and solid. So there's a 140 key 140 level. Looked like we couldn't hold 141, but a big break, a big engulfing candle yesterday. And if we look at the oil market, the Canadian market, obviously this was all to Trump's talking about tariffs, as I said at the top of the shop, on Canadian exports, 25%, and 75% of all exports out of Canada goes to the United States. Obviously, oil and oil-related products all through the United States to be exported through the Gulf. So big hit potentially from the incoming President Trump. If we look at energy, while we're looking at CAD, we look at oil, it's back under $70. Today, that was the big down day yesterday after the potential sort of peace deal was talked about. We're back a bit today, but again, another key area, $70. Again, I've lost all these off my charts for some reason. I don't know. They should stay. I've saved them, but let me just put this on while I'm here. It'll hang on for at least a few days. $70 is around about there. That'll do for now. So yeah, we're back under $70 basically. US is under 75. Brent, remember Brent is the most highly traded. When people talk about the oil price, to talk about the Brent UK oil price, but many of us traders, the Americans love to talk about their own WTI, and so the US oil tends to be the one we talk about. But when you see on the general news the price of oil, they're talking about the price of Brent or the price of UK oil, and that's under the key $75 a barrel as well. Indices, metals. Oh, metals, of course. Gold, has it turned around? That's the question everyone's asking. So we had a look at old rally, didn't we? Friday was phenomenal, but yesterday was double phenomenal. The dollar came back. As I say, it was a lot of it to do with the weakness of the dollar. The yields were down. Treasuries are up. Gold lost its luster yesterday. Huge engulfing channel. So what was long here has been turned around, stopped out. It's had a fantastic week last week. Fridays, Thursdays, and all of Wednesday's activity, all of Wednesday's positivity. So as an end of, as you can see clearly from that candle, it's engulfed, it's taken out all of that action, all the positive action that took us through 2700, 2714, I think it was, wasn't it, on close on Friday night, has all disappeared. Excuse me. Into 2625, and that's where we closed, triggering what was a long trade. I stopped out and now short. So we went this strategy, although it's a bit messy. Well, it is very messy, I should say. The power of the candle, the size of the candle is key. So this took us short yesterday at 26.22 is where we were filled on gold on this crossing strategy. So there could be some more momentum. Potentially the downside. Obviously, the upside, we were looking at 27.40 and then 27.85, which is the all-time high again. But this might be, it could be, the start of a down leg. It is, I say, we're getting to the end of the month as well. But the size of the candle, don't ignore it. It can be significant, just like last time when we looked like we were recovering the shakeout from the election and going to go higher. That was at post-election day, wasn't it? At 6th of November. It's as big as that Wednesday's reaction to Trump's victory. Monday, yesterday, peace deals, weaker dollar, stronger dollar. Yields changing, treasuries in yields coming down, bonds going up, big shakeout. So 26.25 needs to hold. Next level is obviously the 2600 level itself, and then 25.80. And as we're looking short here on the daily, 25.60. Another key level we've talked about all year, 25.60, is the next big support level, as we had, I think, just at the beginning of the month, wasn't it, when we were talking about markets moving up. So that's there's that big down level, 25.60, which held for 3 days, and then we gapped up at the beginning of last week, and then it'll give it all back this Monday, sorry. So and that, you could argue that gap is still to be filled. So if these are daily candles and it's going to be 8 days, it's a bit long, but that's looking to get filled. So next down support is 25.91. And then 25.73 if you're doing this on an intraday basis, but that's looking negative after yesterday's big down day for gold. I'm afraid gold bugs, but that's how we're going. Silver would have had a similar sell-off. There we go. So again, silver, nice horizontal level there. 31.40, 1, 2, 3, 4, 5, 6 days. Another big engulfing candle yesterday. Can't break 31.40. Down we go. Closer support at 30.20. We closed at 30.26, so just 5 cents above that. And then that intraday low here last week for silver took us to 29.68. So under the key 30 handle is the next downside target for silver traders. But here you see with silver, it's been short all this time anyway. It didn't get, there's the head of the election on the 31st when it first suggested that was looking to go. And actually we went short here on this strategy. We'd have gone short here and continued to decline. Would have rallied back, so taking you out, but another short position would have been taken then yesterday on the size of the candle, the engulfing nature of the candle on yesterday's close as well. So silver went short on close yesterday as well. I'm going to put some plans together about explaining some of these strategies and do some little 20-minute videos about how to run with these very, very simple strategies, how to use the indicators. I know a lot of you are indicator averse to indicators, but there's lots and lots to choose from on the TradingView platform, courtesy of TradeLock. I mean, there's literally thousands in here, hundreds in here. Look at them all, and more as well. So I'm going to go through those. Again, if you've got any particular ones, any particular combinations you like, or you want me to explain, or you don't understand, or you think you've heard of elsewhere, please let me know. I'm here to help. We're all here to help, because as I say, if you're successful, we're successful. Just on that, guys, if obviously this is our website, so we're going to add to these some more tutorials. We're going to get some videos up and running, some more written stuff. If you just go to, if we just bring up our Instagram page, you can see yesterday. Oh, it's not cancel. You can see we've launched a new promotion for Black Friday. Everybody else is doing it, so why don't the prop trade do it? So here we are. We have 25% discount off our a very well priced and very competitive challenges anyway, and then we've added for Black Friday for Black Friday 150% refund once you're successful. So if we just go back to the website, here. Let's have a look at the challenges. So different phases, one phase, express phase, just straight in, higher targets, but standard is the standard sort of default market standard for the prop trading business. 2 stages, less aggressive targets. Do it in a more perhaps a slow approach, and now we've just introduced also a new which is going to go live on the website tonight. I think the guys were saying on the funded account. You see here, 90%, starting from 90%. From the funded account. So, many prop trades, although they say up to, from 80% or from to 90%, some start at 40%. I was saying some start at 50%. We start at 80% and going up to 90% if you're successful after the different phases of however you get to a funded account. As I said, Express is this one step, obviously very well priced, and there's a big discount there for our Black Friday promotion, so you can get started for a little over $40, and 150% of that will be refunded when you get to if you get to the funded stage. And it's it. The beauty of the prop trade proposition is obviously you start with you buying the challenge, but you have the rules. The rules are there to keep you in line. If you blow it, you're only blowing a small amount. The problem with, in my experience, I've been trading for many years and I've spoken to thousands, if not tens of thousands of traders, is that people do the same things wrong. They have done for years and years and years. They risk too much and they can't control their emotions. They get too greedy, they get too scared, they don't manage their risk profile, they don't understand about risk management. Here, the rules are there, they're very clear. Look, you've got to get 12, here at the Express, this is an example of the Express, the first phase. So there's a 12% profit target. You can have a maximum daily drawdown of 4% and an overall drawdown of the period that you're trading of 7%. So those rules are set. And that, if you can do that, that's a great way of moving forward. And it's by default, it's making you a more consistent and a more conservative trader. So if you can't, you'll end up blowing the account. And there's no rush. Remember, it's not limited. You have to do it in 30 days, as long as you're trading at least 3 days. You can stop, have a pause, have a rethink, have a bit of go and have a bit of a think, have a bit of education, contact us, watch our videos, read our articles, watch our webinars, and then restart, see what you're doing every day, every trading session, analyze what went right, what went wrong, and focus obviously on the positives, trying to eradicate the negatives. But it really is a mind game, trading, and that's always been the case. And it will be as long as I'm still around. So it's very much you against yourself. It's not you against the markets, or you against your broker, or you against, I don't know, some guru or whatever. You've got to beat yourself. You've got to understand yourself. And again, I talk about that a lot. And I say, if you need any help with that, there's some great books. Great stuff out on the internet, and I'm here to help you with that, guys. Anyway, back to the markets after that little commercial break, I suppose you could call it. What were we saying? Yes, so we were long on those two indexes. The other position we were long on Friday was the Swiss yen, which didn't play out at all. Yesterday there was nothing going on. It was a very quiet Monday. I didn't. My end of day strategies, nothing triggered yesterday. There's quite a lot going on at the moment, so, or potentially for tonight. These are end of day positions, okay? So we've got some movement on the Aussie. Dollar CAD's looking okay, and gold, as we've just pointed out, is looking to be going short today after yesterday's huge move. Yeah, it's that's short, but let's stop the target. 261.20. It might be a wee bit too close. Obviously, this is end of day, guys. Remember, so this gets sort of analysed, or we'll look at it at 10 o'clock my time here in London, and see whether that gets taken or not. Stop loss. No. Stop loss is about $335. 2665 on gold. So let me just run through the ones that are potentially end of day trades. So Aussie Swiss. Let's have a look at them on our charts here. So what we're looking at, crosses, Aussie Swiss. So Aussie Swiss is a potential short trade. You see here on the moving average one is saying short. I'm getting pretty sure that we a short position potentially. Yeah, it's a bit channel bound, but down to 57.08. So 57.08 is the target. 30 pips initially on that one. So 57 is the target on that one. As you can see here, it's quite a move, but you can see it's relative. I mean, it's not trending. It's not a trend following sort of strategy, but it's triggered. My system's triggered. I know it works over time, so I'm not going to argue with it. But you can have some big volatile days. Yesterday, Friday was up. Yesterday was down, and again engulfing. Didn't quite break the 20-day moving average there. It has today on this one. So this strategy will be triggering short as well tonight. This is the daily, remember. And my offline strategy is also trading short. So that's short Aussie Swiss. Similar position for Aussie Yen. It's already breached the 100 level. Key pair. I don't know if anybody trades the Aussie Yen, but it does move around a lot. So key sentiment indicator of how things are, how things feel in Asia. Both big trading nations, obviously both. What is this? Aussie Yen. Yeah, under the key 100 level here. So here this went short last week. This simple. What you can see, it's been long. But the last trigger was short here on the 21st. And it's looking to go short again tonight. So because it's breached the 100 level, I guess is my strategy back here. But there's a big support level around the 89.80 is the target level. 89.80. So it's this level here. Is the target level for, come along, horizontal line. 89.80 is where this end of day initial target is looking to get. And you see we've been down Friday, down Monday, down again today. So 89.80 first target on the close tonight. That's probably negative enough to take that trade now, but I can't advise you to do that. But you should always wait till the candle's complete. So Aussie Swiss short, Aussie Yen short, dollar CAD. We saw earlier had already gone long. That's triggering long at first target 41.20 on dollar CAD. We've already had a look at that, haven't we? And gold was also short. Well, we've already had a look at that. On a more aggressive strategy, there's probably more kicking around on there. Yeah, there is. There's lots more. I'm not going to really run through them all, but CAD Swiss, Euro Oz, Euro CAD, Euro New Zealand, all looking pound, Oz, pound, CAD, pound New Zealand, New Zealand CAD, and gold as well on the more aggressive strategy. So we got a Euro, lots of Euro trades, Euro Oz, Euro CAD, Euro New Zealand, pound Oz, pound CAD, pound New Zealand also, pound and Euro in place on the crosses as well. Overall, currently, as far as where are we? We're at 3:30 London time. It's US is open and running. I've lost my. I'm trying to take this down here. Come down here. We've got a strong. Currently, today we got a stronger yen, a weaker CAD. CAD yen is our biggest mover today. So let's just go back to the let's go back to the calendar and see and review that major news of the day and what's coming tomorrow. So let me just filter this out again. Got lots of things in there I don't want. So it's all just the majors. Big day tomorrow because everything's compressed for the week because of Thursday being closed. As we supply that, so we can see the major news of the day. Recap: it's a minor miss, but that's still a very strong consumer confidence, best since February 2022. Best 2.5 years, 111.7. Although it's a minor miss. It is, I suppose it's red. I'd left that black, to be honest. Last month was revised. I don't know what's going on there. That said it was 2.1, didn't it? Before, very strange. New home sales, quite a miss at 610,000 compared to 725,000. So overall, it's sort of weighed on the dollar a wee bit, and indices were down last time we looked, didn't we? Yeah, that's quite significant. The minutes from the FOMC, it is a high impact event, and it's important simply because it's what the members talked about and discussed, and it's what was documented. It's what's going to go down in the history books. It is backward looking. Obviously, a lot of it's already out. A lot of they've all made their positions, but obviously that was pre-election. So obviously the political situation is all clarified now. Trump has got his major economic advisors in place. I say the announcement of his Treasury Secretary yesterday, Mr. Bessent, very much a fiscal, or seen as a fiscal hawk. So we might see a cooling of some of these tariff expectations, but at the same time, he's announced 25% on it. I say its nearest neighbour, Canada, and others. Obviously, everyone else, the rest of the world is in the crosshairs. All the importers or exports to the Americas, to the United States, and all the importers in the United States, obviously all on guard as Trump prepares to take his second tenure forward with what he really proposed in his campaign speeches. So we see how all that pans out in future. So unless there's some major announcement or major argument that took place in the meeting, which very seldom occurs, although this is a high impact event, don't expect too much volatility. I might end up eating my words later on tonight when we have a look at that. But the dollar, next move for the dollar and the dollar pairs on the FOMC minutes at 7 o'clock tonight in 3 and a bit hours. The private inventories, oil inventories at 9:20 London times. The official EIA inventories tomorrow, Wednesday, not Thursday, because Thursday is Thanksgiving, as we all know. And then overnight, we have the expectation that the Reserve Bank of New Zealand will cut rates by another 50 basis points, bringing it down to 4.25, very much in line or ahead of other developed the big 7, big 8 economy, big 7, big 8 forex economies to 4.25. So sluggish growth, sluggish response to stimulus in New Zealand. So they're having to go again. This persistent stickiness of inflation as well. Claims tomorrow as well. Durable goods tomorrow. I'll be live for all of this again. Big data today tomorrow. But again, we'll have the volatility of wrapping up the week as well tomorrow as well. But the core PC is the really one that the Fed members look at and consider when we're talking about inflation in the US. The core PCI price index is the one all eyes are set on. So lots going on in the next couple of days. I'm fairly bullish about that US data still, although say both have missed and they're both red here on this calendar. That's maybe a caveat in new home sales, but that's the expectation that rates might not be coming down as quickly as many had expected. But remarkable consumer confidence, remarkable US consumer. So there we are. Let's just go back to our majors. Let's have a look. Delete. There we go. So the euro's done. So let's just go back to how we've reacted. So it's bounced up a wee bit, hasn't it? So we just got the 5-minute chart since the data. Let me just do that. So there was our data. Sorry, what time does it? What am I talking about? What time? This 5-minute chart. The data came out at 3 o'clock forward, which was this one here. So we were down initially. Not sure what we were doing. The initial reaction was euro spiked a wee bit, a weaker dollar. That's all turned around, as I might have, I sort of intimated, didn't I? That it's a strong set of data as far as I'm concerned from the US there. So the rally to 105 that we've held since this morning has given up again. So quite a significant leg. It's only a 5-minute candle there at 20 minutes after the data's come out, after it's all been ameliorated. The analysts are talking to their clients. So we couldn't hold the there's the moving average holding out really nicely there. So even for 5-minute charts, it was biased to the downside as the data came out. Didn't want to go any higher. Rejected. Final leg up and then down, and new low of the day potentially. Where were we this morning? Where are we this morning? We were down here this morning, 104.25. We're still away from that, but next cluster here takes us to 104.78 range. Another 15 pips to the downside potentially. There you go on these 5-minute charts to the downside. So dollars come back on that, something against the euro on the absorption of the data. Sterling, we similar sort of move. I'll leave this on the 5 minutes. So again, this morning's low was all the way down here, 125.07. We actually get under 125 today. We didn't know. That was last night, wasn't it? It was this morning. 125.07. So again, next cluster here, you can see there quite clearly 125.48. So 125.50. So we're only, where are we now? 125.58. So 8 pips away from that. But you can see that's again another one. Stay in your trade. When something is trending, look at the size of the candles. Have we broken the key moving averages? Looked like we were going to go up there. The 21 held. So you add again here on the short. Down again, I would add it again there on that short ahead of as the data came out. That would have been enough. That's enough. That's down, and then add it again here at 20 past. We've gone lower again. This, I think, is this blue line. I think is a daily trend line, if I'm not mistaken. So that's a potential big support area. Let me just check. Or was it the 4-hour one we put on earlier? It's that 4-hour one, isn't it? That's interesting, isn't it? That I drew really badly, but so it's perhaps not that significant on the. But yeah, there we are. So it would have broken it, hasn't it? So that remains broken through that 4-hour dodgy trend line I drew earlier. So if we go back to the 5 minutes, it's breached it very significantly. So that's why you have to draw them properly. You don't cut through candles. So there we are. So the 5 minutes has breached that 4 hours. So that might be an area to get back to. But if you're trading this on a 5 minute, you've been short from this top at 26. It went short there at 13.15, and you've been short ever since, my friends. Cable. So let me leave you with gold, everybody's favorite. Certainly the one that everybody's trading the most here on with us at proptrade.com. So it's 5 minute chart. Let's look at the hourly chart. We've sort of bounced a bit now. We're sort of, again, the 20-hour moving averages kept us short from that turnaround at 27.21 on yesterday. Looping down again this afternoon, and sorry, yesterday that wasn't it? Through 26. So yeah, 26.09, 26.05 this morning, or last night we went to with gold. So 2600 is was calling. We've bounced up 26.25, but we can't breach 26.30 so far to the upside on an hourly basis. So still biased to the downside, as I said earlier, for gold. And the daily time frame was short yesterday, and my daily strategies are triggering short as well, but that's what I'm seeing. So there we go. I'll see you all tomorrow for the big data, more big data for the week. Claims, durable goods, the GDP, PCE, lots coming out tomorrow ahead of Thanksgiving. But as I say, do have a look at our promotion for Black Friday. Let me just bring that back up. Oops. On our Instagram feed, was that there? We that on our Instagram feed. There we are. That's that little lot I got. 25% off all of our challenges, and then 150% refund on successful passing of the challenges and underfunded account. Okay, so take care. We'll see you all again tomorrow, and may the pips be with you as ever, my friends. And to say, we'll see you all again tomorrow. So if there's any, let me just check. There's no questions or anybody who wants to add anything. Doesn't look like it's nobody else. Yeah, nobody's asking. No. Okay.